Mark, from a portfolio manager's perspective, are you at least a little frightened, or have you changed anything about your methodology based upon what you've seen over the last week or so?
Well, thanks for having me on, Dom. Not frightened at all. The numbers are dictating that you shouldn't be. 83% of S&P 500 names beat their earnings in the last earnings season. So nothing to be frightened about there. You're going to have any serious correction here. Those numbers have got to change.
Now, the AI trade has been the focal point of this, rightfully so, because mathematically speaking, it is a massive part. The AI direct trade and the kind of first and second order derivative trades now represent a massive part of the market. How worried should you be, and would you be looking for buying opportunities on any further pullback?
AI definitely is dominating the news, and it's obviously making a lot of money for people who have invested in it early on. I think right now what investors are looking for is kind of like the picks and shovels back, if you're going back to the 49ers and the gold miners, where we're trying to figure out, all right, listen, AI is out there. The chips have made a lot of money. What else is there? And so my clients are looking actually on electricity, the XLU specifically, because that's going to drive earnings. It's typically been a boring asset class, utilities. Not anymore. Up 30% this year, top performing sector in the S&P 500. And this AI trade, I think, is going to propel it even more, because this demand for power that AI needs is astronomical. 3 states, like California, it's going to take to power all these data centers.
So do you think that, you mentioned you see further gains ahead for that utilities trade? It is one that's seen already a big gain so far this year. Just how much can a derivative trade on a central theme like AI play out in the coming years?
Listen, I think we're in the second inning of this AI trend. I mean, if you look at companies that I speak to, who are my clients, very few of them are doing more than ChatGPT. That's a second inning, in my opinion, compared to all the different apps that are out there and software that's being put out on an almost monthly basis from that sector. And so I think we're in the second inning. And so if you believe that as well, then I think this utility trade has a lot more legs because of that.
Do you feel like the word of the day? We often ask about that kind of thing. What exactly is your word of the day or theme?
Yeah, K-shaped. When I speak to clients every day, they're trying to figure out, like you just said, should we be scared or not? And I'm saying, listen, we've got 2 economies right now. We've got one where you've got 83% of the S&P 500 names up, and you've got also rising unemployment. You've got 30% mortgage deficiencies, and so there's a lot to be said on both sides of the economy. But I think investors need to be keenly aware that you're not investing in the economy when you're buying a stock. You're investing in a specific name that has a long trajectory of earnings growth, and when you're buying a stock, and you're not buying the overall economy. So I think investors really need to be keenly aware of kind of like not listening to the news headlines so much, but really kind of do your homework and look at what you own.
And before we let you go, really quickly, are you fearful for 2026?
Not right now. Until I see the numbers change, I'm still very upbeat and bullish for 2026, given what's going on with companies and earnings.